Alrighty. What is going on, guys? Welcome to Stock Talk with Nico Criticos. Today, I'm going to be showing you three of my favorite stock picks for the month of May 2026. I've been buying these stocks the last couple of weeks, and I am very happy with the positions I have, and one of them has already performed really well. So, number one on my list is going to be Upstart. This is a company that's been investing in AI for longer than most companies in the market today. 2014 or 2015, I believe, was when this company started utilizing AI, and they were founded in 2013. So that would make sense. So within a year or two, that was pretty much is what the company is based off of, is a cloud-based AI lending platform doing personal lending, auto lending, and others. This market cap is only $2.8 billion now. Okay. And as you can see here, I bought 150 shares at $29. And the interesting thing is, if we come down here, just in the last week, we have two insiders. Both, I looked this guy up right here. This guy was a co-founder, and I think he was a CEO, maybe not anymore. And I was just curious to see, like, for the couple $1 million he invested, what sort of net worth did he have? And is that a substantial amount of money for him? So it's anywhere from, this says 450 million, this says 300 million, somewhere in there. But either way, he's investing $5 million. So is that a lot of money for him? Not necessarily, but it's not a small amount of money. It's not something you still wouldn't just throw $5 million out. So I think that's a very bullish sign. Bought in the open market. And then here is the CEO who yesterday bought $1.3 million worth. So I take that as extraordinarily bullish for the stock. If we look at the past year, it's come down a lot. This stock was $80 a year ago. Now it's only 30. And the other interesting thing to note here is that since 2022, that this is 4 years now where the stock has basically been flat. Okay. And if their numbers haven't been doing anything, that would make sense. But that's not the case. Since 2023, their sales have doubled to 500 million to now over 1.1 million or 1.1 billion. I'm sorry. So that puts it at a price to sales of 2.4. Okay. Again, this is only a $2.8 billion company and they're doing 1.1 billion in sales. And look at their growth rates. They grew 53% last year. And then in the next year, they're expected to do 35% growth and then 31% growth. So those are much higher growth rates than most stocks in the stock market. So just keep that in mind. We have that. Then we come to look at the PE basis, which to me is the most important. Trading at a PE of 11 or 12, a forward PE of 8.8. Okay. They don't have a long history of profitability yet, but they are profitable, just not by a lot. So I'm hoping to see those numbers improve. Free cash flow, okay, it's negative, not the end of the world. I don't like all the debt they have, but that's what you get sometimes. It's not terrible. They have around 2 billion in debt, under 1 billion in cash. Not terrible. I'm really happy to see they bought back shares here and it went all the way back down to where it was over a year ago. That's good. And then we can look at the valuation, even though there's not a whole lot of metrics to look at here. Let's see, free cash flow. Let's look at price to sales. That's probably the most important here. And as you can see, over the last couple years, this is pretty much as cheap as it gets. So I really like the cheap valuation. The sales are growing tremendously, and 11 times earnings. I mean, the insiders bought all that stock. We could look through this, but there's really not. I mean, there's not much here. I compared it. People always want to compare it to SoFi, and Perplexity says pick SoFi because it's pretty much because it's more diversified and stuff, which makes sense. But Upstart has the way cheaper valuation. So if we go on a gap basis, which is what I like to look at how crazy this is. EPS a year ago, 0.4. This year, 0.9, 1.8 next year. So they're doubling EPS 2 years in a row. Okay, so I mean, if they're going to do $1.81 next year, then who knows what they're going to be doing the next year? It's going to be somewhere between $2 and $3 probably. And this is the $30 stock. So that's kind of the way I'm looking at it. I just see this as very low risk. It could even be a potential acquisition target. Um, so that's kind of the way I'm looking at this. I see here's the major things. I see I see extraordinary sales growth, growing way faster than most companies. I see a record low valuation for a where a stock has not moved in 4 years, even though their sales has more than doubled. And then I see two insiders buying millions of dollars worth this week. So those are pretty bullish signs for me, and that's why I'm buying the stock. Number two on my list, we have Planet Fitness. This is the one where I'm already up on this. I'm already up 20%, but I don't see that as the end of the world where like if you wanted to get a position in this at $52, maybe I would buy a little bit, but I bought pretty close to the bottom here. What it bottomed at 44. Yeah, and I got it at 43. So, I bought literally on the day it bottomed probably then. But the good news is that so this one also has tons of insider purchases, but look at yesterday the CEO bought shares. Well, yesterday the stock was $50. Yeah, I think he bought it at 50. I think the price was $50. So yeah, he bought it at $50. So today it's 52, a little bit higher. Again, it's already 20% up from last week. But if he's buying at $50, that means that and even if you bought at $45, it's like they're not buying it to make 10%. They're buying it probably because they think it's going to go back up to the levels it was just at $90 plus. That's where I see it going. I think this is going to be an easy 2x on my money. Um, Am I a big fan of Planet Fitness as a gym user? No, not really. I've been there several times. I've never liked it over the last couple of years. I've been to tons of different gyms, but Planet Fitness I'm just not a fan. I just think that I like heavier weights. I like better equipment. I like when I all the times I went there, I've only seen Smith machines. They don't have actual bench, real benches. Just everything. It's just limited weightlifting equipment, and I don't like how they kind of just. I think it's for people who either want to do a lot of cardio or for people who don't take it serious, and they're not really big exercise people. And that's why I think they started out as one of the cheapest places, which now they're not the cheapest place because I have a Crunch Fitness opening up near me, and I think their first membership starts at $10 a month. Planet Fitness now is $15 a month. So there is that, which I believe and the reason the stock is down too is because number of users dropped 36% or number of memberships, whatever. And so, and it's probably because they upped the price. That's probably what it is. But again, I think it's for people who don't really are not serious exercise people, or they just want a super cheap gym to go once in a while and whatever. They're just looking for the cheapest option. Again, not serious exercise people. But with that being said, they also have thousands of locations across the country, which is a huge moat because there's only so many gyms that have that. You could bring a guest, at least last time I checked, you could bring a guest. There's definitely pros. I don't think their growth is gone now. And the other thing is if they lost 36% of memberships. Oh, okay, so I guess the way to look at this would be they lost 36% of memberships last year, but their revenue was up 14% or so. Yeah, 14%. And I believe last year, at least a year ago, is when they raised the price from $10 to $15. So that's what boosted revenue then. They pretty much boosted sales like that. And I would think that would mean more profitability, right? Yeah. I mean, net income's up, net income is up, free cash flow's up, EPS. Let's look at how they bought back more shares. That's good. Let's see how their profit margins did these last couple of years. So it peaked in last year. Okay, so maybe that was right when they switched. Let's see. Let's ask Perplexity here. When did Planet Fitness up prices? May of 2024. Okay, I'm way off. 2 years, not 1 year. That was start that summer. the $10 a month had not been changed since 1998. That's crazy. $15 a month, May 2024. Okay, so if we look at their margins, that would be where? Q2 of 2025. And that's when we saw it get pretty close to the peak, which would make sense. So that was the peak. As everybody knows, this year inflation is hitting a lot of people hard with a bunch of different sectors. And it would make sense that, people that are looking for the cheap option, now you could go to Crunch Fitness or now you could go to somewhere else for maybe $10 a month. Now that it's 15, who knows? Maybe they're going to lose some customers, but their margins should be better. Let's see, so Q1 of this year is 15%, same as last year, and then it was 13% then. So maybe I don't know. I was gonna say maybe that price change helped them add that extra 1.5% of margin, but I don't know if that would make sense. So hopefully we see. So in other words, Q1 of last year they did the same 15%. Hopefully we see at least 17% now. And when does this company report earnings? They're reporting earnings. Oh, they just reported earnings. Okay, so they beat on EPS. That's good. But basically, we have EPS on a GAAP basis. We have a slight increase this year, and then a nice increase to 3.4 next year. So, you put a simple 20 times earnings on this. We're looking at, what is that? 20 times 3.4 is 70 or something, right? Let's see, three times 4. 68. Okay, so there should be an easy $70 stock, if not higher, because look at where this stock normally trades. Let's go back to this graph down here. Where is it here? No, not this. Valuation last 5 years, 3 years. It's traded high. It's traded in the 40s and the 50s for the majority of this past couple of years. Just this year, the stock decided to trade down to between 15 and 20, basically. So now we're in this 15 to 20 range. I don't think it's going to stay at 15 and 20. I think it's a much stronger company in a stock than that. Forward PE of 14 compared to, look where it normally trades in the 30s. Do we have a PEG ratio? 0.7? That's cheap. It's just cheap. And okay, let's see. What do we have? So it says they're only going to do 7% revenue growth. That's not great, but we'll see what happens. We'll see. I just think this is incredibly undervalued. I think this is way too extreme of a drop. So we'll see what happens. But I am bullish on this. I mean, again, the insiders bought millions of dollars, and I think this should be easy money. My third and final pick is going to be Pool Corporation. If you don't know, this is the largest player in the pool space. So I have 25 shares at $206. And this is another stock that's gotten destroyed the past year. This stock was in the 300s. Now it's down to 175. So it's basically been cut in half. And if you go back further, I mean, this stock, obviously, right after the pandemic, when everybody was investing into their homes and stuff, that period around 2021, 2022, they had a ton of business. The stock went to almost $600 a share, and we are down over 60% in the last 5 years. So it's come a long way. And again, we're in an inflationary time now where maybe people with a lot of money are buying pool or buying new pools, but is the average homeowner buying a pool? No, probably not. So keep that in mind. We have, I believe, 60% of their revenue is made up from maintenance sales, and then 40% is made up of new pool installation. So pretty much, and when you look at the chart, you'll see that these last couple of years, since we haven't had a lot of new pool installations, the revenue that's keeping them alive right now is that maintenance revenue. That's pretty much been flat for two years now. So again, at some point it's going to turn around. Do I think it's going to turn around this summer? Probably not. Probably not. I think we have at least months to go, several months to go before we see inflation come back down to a better level, and hopefully people start, investing in their homes more. But with them being the biggest player, the distribution network they have is incredible all over the country. Most pool stores and stuff get their supplies from Pool Corporation, and it's at a very cheap valuation now. Well, because for a good reason, because their sales is down, net income is down, the numbers don't look good, but you just have to think, okay, this is going to turn around at some point, right? Because unless pools are just gone forever, nobody's ever going to buy a pool again, then this company is going to benefit sometime in the next couple of years when pool installation goes back up. Their balance sheet is not good. 1.2 billion in debt, only 60 million in cash. That's the problem. Luckily, they are buying back shares about 3% a year there, so that's nice. If we come to the valuation, you're going to see the cheapest valuation you've ever seen. Here's the past 10 years of the PE. It is at by far the lowest amount. We've only seen it trade at this valuation in 2022 during that huge crash. Free cash flow yield has skyrocketed from where it normally is at, and we are at over 9% of a free cash flow yield. Price to sales, the cheapest you're going to see. We are all the way down now to a 1 price to sales. Okay, so we're looking at historically low valuations. Guess what? The stock also has insider purchases. This has been my favorite thing this past week. This company has a lot of insider purchases. So we have one of these directors bought almost between $3 and $4 million just in the past week. Then we have 3 other directors also buying between around $100,000 to $200,000 a piece. So what does that tell you? If you have 4 or 5 different insiders buying the stock, again, because they know it's cheap. They know at some point it's going to turn around, and and the people that are selling the stock, like, I don't necessarily blame them because, like I said, the numbers are bad, and maybe they don't want to wait. Maybe they think, oh, inflation is going to be around for another 2 years or something, and it's not going to turn around anytime soon. Well, I don't know if it's going to be 2 years. I would hope in under a year, things get fixed, supply chains, Trump's tariffs, whatever has to happen. But I hope that gets fixed, and I hope we see prices come down. But that's why I'm buying the stock. You also get a nice 3% dividend, but it's a cheap stock. It's beaten down for a reason, and I think this is going to turn around. They're the biggest player in the space. And when things turn around, they could really turn around because, like I said, the stock was $600 a couple years ago. So if we have another boom market like that, then who's to say it can't go up to $500 again? If it's just an average market, this is where it was on average. On average, it was $350, $400, which is double where it's at right now. So you basically would double your money over the next year or two if we have just a decent market where people are buying pools again. That's all it takes. So that's why I'm buying this. Those are my top 3 stock picks. Let me know what you guys think down below, and I will see you in the next video.